All right, hello traders. Welcome to this live intraday strategy webinar on SB Trade Desk. Today is Tuesday, December 1st, and I'm Michael Boutros. Good to be with you guys here this morning. Eileen, great to see you back in the room. Good to be back. So we're about a couple seconds out. Here comes GDP for Canada for September. Missing expectations across the board. You're seeing the loonie with some extreme weakness here. So year on year, we're flat. Month on month contraction of 0.5%, missing the mark on both of those. You're seeing the loonie come right into resistance. So remember, last night we highlighted the dollar CAD on the intraday radar charts. You're basically looking at bearish invalidation right around here, guys, the upper median line parallel. We noted as long as we hold below that, we'll want to continue to maintain a downside bias, and certainly the shorts have been fruitful. The reaction here on the back of a much weaker than expected GDP print. Remember, this is monthly, so it's not going to be weighed as heavily as the quarterly prints. And if you can see that the quarterly annualized GDP is more or less in line with expectations, and you did see an upward revision there. So we'll look to see if that holds. Our bias, again, still favoring shorts while below essentially the opening range high for the week. Here's the weekly open for the dollar CAD. Bring up a near-term chart here. We'll see if we can find any triggers, but we'll be looking for that to hold as we head into the U.S. trade session. Okay, so now that we got that out of the way, there's a lot of pairs to cover today. So as usual, any trade setups you want to review, questions, feel free to throw them on the message board and we'll hit them as soon as I get a chance. Okay, so the 70 break below in and of itself is typically a trigger. We'll also throw this on right here just to keep an eye out. Don't like using those super vertical triggers, but sometimes can give us some reference. So we'll see if this thing offers a drawback here. All right. Mark, Sterling CAD. I'll write that down for sure. I don't think I went over that last night, but we'll take a look at it. CAD. Okay. Keep the questions coming, guys, and again, we'll get to them. So, I guess let's cover dollar CAD first things first. From yesterday's radar chart, you know, the basic premise of the trade was this. The trade turned over at the start of the week right ahead of that upper median line parallel. And we're continuing to favor the downside while below 133.77, which is essentially the 618, that swing high from Tuesday, and right ahead of that upper median line parallel. So obviously on the print, we soared right into it. We're continuing to favor the downside. Pay attention to this, specifically if we head into the U.S. session, this 30-minute candle closes below 60. That'd be a 60 rejection on news into resistance. That's sort of your ideal sweet spot to try to press some shorts here on dollar CAD. On the broader view, here's what dollar CAD looks like on the daily. Note that last week we turned around right here at the high day close for the year, came at 34.19. We surged just above that. The high was 34.34 before we closed well under on the session. Here's the current operative slope we're working under the assumption of. So if this continues to hold, also note sliding parallel off the lows from November, catching the highs. We'll like to see that hold here as resistance. Remember, we're just opening up December trade, so the opening ranges are definitely in play here. It is a constructive trade, but the one thing that we want to note is that the entire month of November, on every subsequent push higher in price, momentum was unable to clear 60. So on each one of these thrusts into a new high, you couldn't clear 60 on a closed basis on a daily signature, and again, we're continuing to hold that now. So the risk, if we're going to turn over, again, we shouldn't see this thing go much higher than it just did on that spike. End of the day, guys, if we break back above 134, we're right back on the long side. You're looking for 134.19, again, the high day close. More importantly, those highs at 134.56, 134.58 is a long-dated 2002 618 retracement, and that takes us into 134, 56, 58 region. All right. And again, I'll really try to fight this while it's an overbought condition, so we'll continue to monitor that. Any questions on dollar CAD before we move off? Keep in mind later today, as far as the docket's concerned, guys, you do get some PMI data out of the United States as well as ISM data, more importantly, at 10 o'clock. Looking for a nice boost to 50.5 from 50.1. Remember, with ISM, specifically on the manufacturing and services, above 50 is expansion, sub 50 indicates contraction. So we'll be looking for that 50.5 print. But looking ahead into the remainder of the week for the CAD, there's not really much data that's on tap after today until we head into Friday. Tomorrow, we get the BOC interest rate decision, expecting them widely to hold at 0.5%. Not sure that'll be a major market mover. We'll see what commentary comes along with that. But really, Friday is going to be the big double whammy. Once again, you see the U.S. employment numbers coming out at the same time as Canadian unemployment, and those both hit the wires at 8:30 Eastern on Monday morning. So we'll definitely keep the dollar CAD here in view heading into the close of the week. As far as relative performance on the session is concerned, here's what we look like so far. You can see that the dollar is weaker against the Kiwi, Aussie, and Euro. Kiwi, biggest performer on the session, up 0.9%. Slight advances versus, obviously, the CAD. You can see that that's changed just in the course of the last couple of minutes here. Yen unchanged on the session. We'll go over that. Still favoring the long side here, but it looks like momentum is starting to wane. Swissy and sterling lackluster so far on the session. All right, let's jump right in. So that is dollar CAD sort of on the daily and the near-term approach. Watching that weekly opening range high, again, a break above 33.99 shifts the focus right back to the upside. Next up on tap, I guess we should go over the update first, then we'll jump into the following radar charts. But last night's intraday update highlighted the sterling Aus and the Aussie dollar on the back of yesterday's RBA interest rate decision. Obviously, they held rates unchanged. The initial reaction, to tell you guys the truth, I was in an Aussie Kiwi long, and I literally got stopped out to the pip before it surged right ahead of the release. I'll show you that trade in a moment. Still like it near term, but let's jump right in. Here's what the sterling Aus looked like yesterday on the daily, or on the intraday. So if you remember, we highlighted the setup last week when this trade was coming into 207.90. We issued a top side bias with a break above that median line. We got it, and long since then have sort of been the game plan here for sterling Aus. Now we opened up the week again, respecting that same range that we held into Thursday, Friday, with this 236 retracement, the Thursday highs holding as resistance. That was at 209.57. In-term support, you're looking at 208.38. And then you had these major key support levels here that we ran into last week. More importantly, also the median line, lower median line parallel was coming right into that region. So all we're noting in these trades, guys, and it's really important to really read into the description, is we're at support within a downtrend. Plain and simple. Now, there was actually a near-term trigger to the upside last night off this level. You're looking for 49 pips. It rallied more than 60. So there was opportunity to take the long there. But it's a downtrend. We're simply at support. So more so, you'd be better off looking to sell rallies. And in fact, that's exactly how it panned out. So sterling Aus, okay, we came into that level. Here's that support level. Again, we surged as high as 208.13 on that rally, 208.12. Momentum, again, resistance trigger held. Short issued. Initial targets, again, 207.20. You don't target anything outside the range until we break. Next subsequent targets at this point, 206.40. And that was basically just a longer-term median line. You can't see it here on the 30-minute chart, but it's a longer-term median line extending. I'll show you the daily. Extending off that November low or September low from last year. Right here. So I'll also bring your attention to the fact that you have the current operative median line off the highs in that region. So initial support, you're looking for basically 206, what was it, 206.40. Okay, and a subsequent target down at 206 at the 206 figure itself. At this point, we can lower our bearish invalidation level to that swing high at 208.38. So yesterday we cited a bearish buy sub 209.57. Now we'll move that invalidation level down to that 208.38. Again, you'll recall that was the low day close ahead of this break. Okay, so that was the close for that October low day. So still a pretty clean setup here on Sterling Oz. And with the pound doing what it's doing, here's the pound look like. Just a quick segue. We'll go back into the pound if you guys have any questions on this. But I was looking at this last night with what the pound was doing. Let me snap these lines for you real quick. It was looking very interesting for me to take a short from here last night. It's a good thing I didn't because we finally did make a tag of that 38.2, the swing highs from Thursday. And again, the short trigger from there looked a lot better. Initial downside targets on this pull right here, I'm just looking for 52.55. The actual soft target's at 52.52, but we'll see if we can get that triggered. So it puts things in perspective here with what we're looking at on Sterling Oz. Looking to sell rallies sub 208.38, near-term support 206.40, and the 206 handle. Keep in mind, again, guys, this is a larger range scalp. Okay, you're looking at a 50 pip as a quarter of the daily ATR, so we're putting in about 200 pips per day on this trade. We want to make sure we keep that in mind. Any questions on Sterling Oz? See some new names here in the room, guys. Just a quick reminder for anyone who's new, if you find any charts here that you'd want to keep for your own reference, there's a camera button in the top right-hand corner of your GoToWebinar screen. Go ahead and click on that, and you can take a freeze frame of any of the charts you see presented on SB. So it's a great tool, specifically if you're trading this intraday and you want to refer back to these charts. Feel free at any time to take that snapshot. All right, so that is Sterling Oz. More favored than Sterling Oz last night was the Aussie dollar. And this was one that, in the back of the interest rate decision was a really interesting reaction. So here's what Aussie dollar looks like on the daily. Okay. We've looked at this chart at length over the last couple of months. We've continued to note that the momentum signature here is hinting of possibly a larger scale turn higher. You saw that momentum trigger break last week, came right back into support to start this week. Where we bottomed on Monday was so perfect. You don't always get these exquisitely clean setups like this very often. So 71.77, a longer dated 618, 72 handle, really nice pivot in price, and last month's opening range high. Essentially, we came right into that and rebounded higher. So 73 is where you start to get a little contentious here on the Aussie. So if you recall from last update or last night's update, we were talking about this thing holding at near-term resistance, which was just ahead of that, right around 72.78, and basically we'd be looking to pull a playback off 73 if we got it. Well, you got the spike into 73. Here's what it looks like on the intraday charts. Okay, I'm looking for a near-term break lower. Again, as a disclaimer, yes, I'm looking for a near-term break lower, but at the same point, if we get that pullback, guys, I do think it's going to offer some nice opportunities back on the long side. It's a constructive trade any way you look at it. It's just that we've come up into a big resistance barrier. So a couple of things I'll note real quick. The 786 retracement comes in at 73.02. On the daily chart, you might notice that I have the 764. The 764 retracement comes right ahead of this at 72.94. So either way you look at it, you're coming into a major region of resistance. This is a 1618 extension off of the ascent from the lows, and they both converge right here. As far as using 786 or 764 retracements, guys, I find that sometimes the commodity currencies actually tend to work with a 786 retracement better. 764 is just one minus the 236 retracement, so it's not a true Fibonacci sequence number, but it's commonly used. So I'll typically reference both of them. I'll typically see which one gives me the best pivot in price, looking back in price action. And with the 764 already represented by this 1618, I'll just highlight this entire key region. Long story short, there was the resistance barrier we were talking about yesterday on the back of the RBA. We made a run at it, and then we stopped right at that median line and pulled back. So the risk was for a pullback with a break of that support trigger. This was what the trigger looked like yesterday. Just to be clear, this was the one that you look like on the report. So it looked like it broke, but it actually didn't push below 60. And price never actually broke the low post RBA. So it was not an operative trigger. This, on the other hand, comes at a little bit better of a region. Now you've got 3 points of divergence. Remember, divergent signals above 70 tend to be your weakest signals. In fact, the closer the divergence points are to 50, typically the stronger the signal. That being said, you now have 3 divergence reference points and a support trigger that's given out. Okay, you're at key resistance, that's 73. If we break higher from here, you'd be looking for a tag of this sliding parallel of the operative slope. Depending on time, you're basically looking at like 73.18, 73.17. More importantly, the 88.6 comes up at 73.40. Near-term support and bullish invalidation for the near-term bias is 72.40. That's a basic 618 retracement from that decline, and also that sliding parallel again of the current operative slope. Remember, when you're looking at the scalp charts, guys, always take a minute and go look at this at the scale charts. I don't want to say 9 times out of 10, but most of the time, this is going to be the chart that's more important to you because you get a larger reference of the trade that we're in, the structure of the decline or the ascent, and the key levels. I just like to keep it super clear here. So if you're trading this near term, just jump on the page. You can see what the next level is right off the bat. Hey, Chris, is this on the Aussie dollar that you're describing? He says, hope all is well. Good morning. Great to see you too, Chris. I have a pitchfork from 824 Aussie dollar daily. Let's take a look. I have a pitchfork from 824, he says, to 1012. Whoop. You're using the 11.8. Yeah, I mean, I'd probably just use the actual low for the month on 11.10 there, Chris. And I see exactly what you're talking about. Basic trendline resistance coming to view right there, right? Beautiful. Beautiful. Let me just make things clear. I'm not really typically a fan of trying to fit analysis to price action, guys. It's a slippery slope between using something that's objective and then trying to finesse the levels to fit what price action is doing. That being said, for me, as I always tell you guys, it doesn't matter what you're looking at as long as we're looking at the same thing, at the same level. So I don't care if 72.95 is a 786, a 764, the median line for the level that you just drew, or whether it's on the near-term chart, this Fibonacci overlay. Either way, Chris, we're looking at the same level, right? And in fact, for the trade that structure that you just noted, let's say I didn't even want to draw this pitchfork here. It has merit, my man, because it's a basic trendline resistance, right? So either way you look at it, I like the level, Chris. I'm with you. Does that make sense? Not to discredit it, Chris, but I'm just saying, like, when we look at it from different perspectives and we all come to the same conclusion of resistance or a key level of threshold that we're reaching, that's all that matters. The more validation that you can put on it, the better. Kyle says, for what it's worth, Ichimoku gave us a lagging line break above the cloud on the daily, very bullish signal. And indeed, as we've been saying here, Kyle, I think this has more to go. It's just that you're at resistance. So you're at resistance within the confines of an uptrend. So expect some pullback, expect maybe a little bit of a stall here maybe. But at the end of the day, we'd like to stay constructive near term while above that 72.40 barrier, this sliding parallel. The only thing that would turn me back bearish would be a break of the lower median line parallel. I know that's far from where we are right now, but essentially it's the same key region we noted as the bullish invalidation last week. If you look at the report, guys, I do always try to link you back to the latest article written on that pair. And if you look at this from the 22nd of last month, the bearish invalidation level was 71.57, 71.59 on Tuesday of last week. That's exactly where we ran into before rallying higher. So at this point, bearish invalidation I'll raise to this level, but the only thing that would put me bearish, or the bullish invalidation, excuse me, up to this level, but the only thing that would shift my focus back to the short side on the broader trade would still need to be a break below that lower median line parallel, 71.58. That makes sense? Kyle, Chris, does that help? He says, on my chart, this level is a major intersection of many things. I just thought I would share that pitchfork, but I agree with you. Yeah, Chris, I'm with you 100%, man. We're at a big region. We're at a big region. So, again, I'm targeting 72.40 on this position. Maybe on the initial break, if we do see this thing coming to 72.50, it'd be my first area at which to start to shave off a piece of the trade. Excuse me, bring my stops to break even. But it's a big region. It's a big region. And as far as the RBA goes, listen, guys, they didn't really say anything that was too bearish. You know, my interpretation of the actual commentary was that it was actually pretty upbeat in comparison to what we've been getting. Now, if we look at Credit Suisse overnight swaps at this point for the RBA, looks like market participants are factoring in only a 2% chance for a 25 basis point cut at the next rate decision. If you look at the 12-month expectations, that's been lowered to about 15 basis points in expected cuts. So basically, that is to say that market participants are really not factoring in that high of a likelihood of additional Aussie easing at this time. All right. So could get back some kickback on the Aussie, looking to stay constructive. Near term above 72.40, a break higher from here. You're looking for that sliding parallel. Again, watch that. More importantly, 73.40 would be the next subsequent region to the upside. 73.60 is a level you'll also want to keep in mind, as that is the high day close for October. Christopher Hudson says, absolutely agree. Right on, brother. Avery says, hi, Mike. Hope you had a good Thanksgiving. Sorry, joined late. I have you covered sterling yen, looking to short. Haven't, Avery. Thanks for their good wishes. I had a great Thanksgiving. Living up here in New York, I'm pretty distant from most of relatives, so it's always good to see family. But thanks for asking, Avery. Haven't gone over sterling yen. I'm going to jot that down, and we'll go over it as soon as we're through these setups. Mark wants to also look at sterling CAD. Looks like a lot of sterling crosses in the focus, huh? So we'll take a look at that. Any questions on Aussie? My favorite setup so far, alongside some of the other pairs we'll cover on the radar charts. As far as the 5-minute chart's concerned, let's just see if there's anything eminently pending. There's dollar CAD. So we made the break below 70. Yeah, we'll see if we can push into that high again. Might be a nice position heading to the U.S. session, guys. We'll have to keep an eye on that. Aussie. Okay, no triggers to jump into anything new just yet if you're not already in the position. And you're looking for re-entry. 72.90 is where sort of I started to jump in on this one just because of the trend line break and the trigger. But we'll see if you can get another opportunity to get that spike to get back on the short side. Big region of resistance. Big region of resistance. Again, counter trend. It is counter trend. So if you're trading this on the short side like me, you're trading half leverage. You're being a lot more nimble, extremely nimble, especially because it's the first day of the month, guys. So we'll want to take a look at that. All right, moving right along. That was last night's intraday update. Oops, on the Sterling Oz and Aussie dollar. If there are no other questions on this, we'll jump into the radar charts from last night. These are setups, again, that we've been following. Dollar CAD and dollar yen were highlighted in the previous session. Again, for anyone who's new to the room, remember on the intraday charts page with all these radar charts, if you see a hyperlink with the pair, click on that to view the previous update published on that setup. So sometimes it will be applicable, sometimes it won't. As far as dollar CAD last night, here's what we look like. So still like the short side below 133.77. We talked about this earlier in the session. I don't know if we necessarily need to go over anything fresh from here, but if you guys have any questions, let me know on this. Basically looking to see if that holds into the US Open. Any shorts you would take would be against 134 essentially on this point if that holds into the US session. The other radar chart from last night was on dollar yen. Still favoring the upside well above 122.97 near term. We were looking for a tag of resistance at 123.38. I know that swing trades are still holding long positions on this as well. As far as the swing trades are concerned, their initial target on the upside, they're looking for 124.30. So that would be a surpassing of the actual high that we made last week. Here's what dollar yen looks like right now. So got a little messy in overnight price action. We actually tumbled right through that median line parallel, but where did we find support? And this was the tell, the former median line resistance. So remember when we opened up the week and we published on Sunday, we said, look, we're opening right below channel resistance, the upper median line parallel. If that breaks, we're going to shift the focus to the upside. And it only makes sense, break of resistance, check it as support before you move off. So I like the reaction that we got down there. It looks like momentum is still fading here a little bit, so I think you might have a little bit more of consolidation to play left in this. Long story short, you're right back above that near-term bullish invalidation level. So I still like the upside above that same level, 122.87 and 122.97. So looking for long triggers off this level, on this pair. Would like to pull back into that level, try to find another long trigger, but it's really tight. As a disclaimer, I haven't taken any positions on dollar yen. The setup is there and the cleanliness of the setup is there, but I think you want to approach this a little bit more from a swing trade, guys. I think Jamie's got the better idea. 15 pips is just an extremely tight thing to try to scalp as far as a quarter of the daily ATR. So we can open that up and make it 20 pips and try to press more, but the range is super tight. So if you're going to be using this setup, guys, just make sure that you really time the entries with as much precision as you can because you really don't have that much room as far as where to put your stops. All right. Yes, Eileen. Eileen saying, are you still finding your best trading time to be beginning of Asia when you do your reports? And of course, 10 a.m. noon Eastern. Yeah, Eileen, you're right on point. Both of those times are still, and again, that's just my personal favorite, Eileen. Every open of each session represents opportunity, whether it's the open of Asia, Europe, or US. But personally, yeah, I've been finding that, heading into the Asia Open, you've been finding a lot of price action and a lot of telling price action. The Asia opening range tends to be like super nice these last couple of weeks. I mean, guys, just look at in the last night's Asia opening range. Here's Sydney. Here's the Tokyo Open. You set a low. Okay, you come back, test the low again. Break the highs. You're bullish against the lows. You close the session at the highs. So the opening range has been a decent setup here for Asia, and it has been for a lot of these calm currencies. Eileen says, cool, thanks. More than welcome. All right, so that is dollar yen. Finally, from last night's radar chart, we also went over the Aussie Kiwi setup. And this one, super frustrating for me. I was long heading into the RBA interest rate decision. Let me show you the live chart. Okay, so here was the chart from last night, and again, the long was only targeting 109.72. Okay, 109.72 is basically the lows that you made right here. It was actually 109.74. I put my limit on the inside. There was a very compelling long trigger that gave out. Okay, some divergence into the lows, and I had my stop right against the low, literally a couple pips out. It came right out, took me right out of the trade before surging into target. Target was 109.72. This thing got as high as 109.84 before turning around again. Again, this is one of those trades that is counter trend. So it was a smaller leverage trade. We did end up eating 17 pips on this, but it would have been a 21 pip easy ATR on the rally if we had our stop just a couple more pips out. Long story short, these things happen. It can be very frustrating, guys, but if we're mindful of both economic data and our risk reward and our risk management in general, things like this should hurt relatively less. But in any event, still looking for that major key support at where we are right now, essentially 109.12 into 109.20, big region of support. I'll bring your attention to basic slope support off the lows from October. Current operative sliding parallel for the formation that we're in. This is a longer dated 50% retracement from the decline off of the September highs. And that dashed line you see there is actual swing low from November, specifically the 19th. So you got a lot down here near term. Remember the broader setup for Aussie Kiwi, and this is one of the reasons that we're looking for this major support. You guys have seen this chart many, many times. For those of you who've been here for a while, this is the basic trendline support off of the January 2014 low, excuse me. Major pivot in price. We've talked about this slope at length. We failed to hold above it, broke above it, closed one day before crashing back below. 110.20 is still the level to beat to get back on the long side here. So the game plan here is this. We're huge at support right here, and we failed to break above this resistance. So the game plan is such. If we break back below 109.10, note that you have that former upper median line parallel. If we break back below that, that would validate a near-term reversal in price. You'd be looking for a drop back towards the 200-day moving average. If we break above 110.20, that would be your breakout and continuation play. Near term is, the risk is to the downside though. Why? You saw momentum with a 60 hold on the point as this thing failed to hold resistance. And again, the pivot and failure to close back above that, you can see that every test of this line as resistance has given us a pretty substantial pullback. Every test of it as support has given us a pretty substantial rally. So that is to say that if we break below, you'd be looking for this thing to give us a much more substantiated drop. Near term, I wouldn't be surprised to see this thing rally test this as resistance again before breaking down. In fact, if you look at this from a broader perspective, it could be setting up a decent head and shoulders formation here near term, of which case this would be the neckline either way. So definitely a very interesting setup here. That long, again, would have been closed out at 109.72. At this point, I'd be looking for the opening range of U.S. trade to give me some tell. If you get a decent short trigger break, clean up as you head into 109.20, 109.10, big region of support. And again, a break below that is really what would put the reversal trade back into focus. All right. Any questions on Aussie Kiwi? Love the setup. Love the setup. Again, a little frustrated on that stop out yesterday, but we'll continue to look for fresh opportunities here on this pair. Amir says, Dear Michael, I'm new to the session. Welcome aboard, my friend. He says, I noticed you're talking about trades which I didn't find on the open trades, pending, and radar charts. Any reason, or am I missing something in here? So, Amir, we don't actually give guidance for scalp trades, intraday scalp trades. We're following too many pairs on a daily basis, and there's a very subjective way of playing this. So where one guy could be looking to play the rebound off support, the same trader might be looking for a short exposure off that resistance. it's very subjective of the way you want to play them. So we give you the intraday key levels, the scalp targets, the bias, and the invalidation level. And it's going to be up to you to actually, pull the trigger on a trade by trade basis. There's just too many trades, Amir. I'd be spending the entire day tweeting if we tried to do a trade by trade basis. Swing trades, we give you the entry, stops, and targets on every trade, and that's updated daily on the swing update. Okay, Amir, we do this session every morning, my man, so definitely come here first thing. We'll discuss where we're heading into the open of the session, your major key levels, and that way as you open up the U.S. trade session in the remainder of the day, you have some clarity on where we're looking at. All right, he says, clear now, thanks, with a happy face. Cheers, man, and welcome aboard once again. Christopher says, sorry, Mike, to be clear, you like Aussie Kiwi short overall, but you're expecting a bounce in the 1.910 area, correct? Right, Chris. Well, I mean, let me just say this right now, Chris. We're kind of getting that as is, right? We came into that key region of support and we're bouncing as is. So I don't want to target anything on a short trade below this level until we break. And with the same respect, even if you're playing the rebound, I don't want to target anything on the long side surpassing 110, 110.20. That's our near-term bearish invalidation level. Chris, does that make sense? This could be the rebound. Basically, if you break near-term resistance here, look for that rally to extend towards 110. Again, 110.20 is where we'd be looking, or what would be the near-term bearish invalidation level. So I'd be looking for short triggers into this rally. He says, yes, range trade for now. Exactly, yeah. So the key range in focus is 110.20 into 109.20. It's basically this 100 pips, really, really, really critical. Any questions on Aussie Key? Sell rally sub 110.21 / the upper median line parallel is what I have written down here for today. $120, okay. And we went over dollar yen. Just wanted to make sure we highlighted this level. Right. Okay. We're going to keep the bullish invalidation level or at the same level here, 122.87, 122.97. All right. So those are the pairs that we highlighted on our intraday setups for last night. I want to jump into your questions. First, we had a question from Mark on Sterling CAD. So let's take a look at that. David also, sterling dollar. So basically all the sterling pairs for you guys, yeah? Let's dive right in. I know what, I want to start with sterling dollar for David Fernandez here, Chris, Mark. So bear with me 1 second. Here's what the British pound looks like. Again, here's what the daily looks like. I was looking at this trade yesterday and really tempted, like I said, to jump in this short. You did break into a new high to actually test the, what was that, the open of October trade. That came in at 151.25. That was the exact high in overnight trade, 121.24, fractional 4. And here we are pulling off that region. Interestingly enough, momentum rebounded off of the 40 level here, which kind of has me scratching my head. The initial target on the downside break below that 618 was right here. We missed that at 149.75. The low was 149.92. Here's what it looks like on the daily chart. Remember, we're just opening the December trade calendar month. Last month's opening range was essentially a wash. You set a range in the first 6 days of the month, and you spent the entire month within that initial 6-day range. So you didn't get much of a play, but you're going to continue to respect that November range for the initial opening range of December, meaning if we push below that and close below the December low, that would be the validation that you would need on a close basis, of course. Here's what it looks like intraday. So we peeked at this earlier in the session, but really tempted yesterday to take this short. Again, didn't really get much of that push. Here's that stretch into the 38.2, 51.23. And this break actually is what has me looking lower at this point. The break back below 150.85. So near-term target was just 50.25. Key support still 150, 149.90. That was 100% extension from the decline off the highs. and also just the stretch low that we made for the opening range of the week. But, below this region, David, I'd like to look lower for the sterling. If this correction could, let me take a step back. If you see price surpass that October open on a closed basis, which has been a clear pivot in price, the risk is, and why I haven't personally been trading sterling, the risk is for this thing to rally like all the way up towards 52.50 again. It wouldn't be outside the realm of possibility, which is why I've sort of been very cautious and shy about getting any positions here on the pound. As far as the economic docket for the sterling is concerned, you're pretty quiet until next week. You did get some UK PMI services on the 3rd, which is what, I guess, Thursday. The industrial production figures next week. But outside of that, we'll have to look for the dollar to really drive this one. So, David, I hope that offers some clarity. He says, thank you, cool. Again, I wish I had some more conviction for you on this one, but I think you have to be very hesitant about where we are in price. My thought process is either this thing swings higher and goes for a tag, inevitably the 618 up at 52, upper median line parallel, and then we sell it again, or it fails miserably here and turns over with a break below 50 again, putting us right back on course. Nice confluence support down here near 49.40 or so. Keep in mind, again, we always like to keep in mind the dollar index. And while this is not a tradable instrument here for us on stateside, it can offer some really nice tells on base dollar movements. At its inception, the Dow Jones dollar index, Euro, Aussie, Sterling, and Yen, equally weighted. Looking at it to start off the December trade month, you're still basically looking at resistance at the high day close for the year. We talked about 12,204, all last month. We failed to close above it, period, since that November 6th high. Remember, the bullish invalidation level for the majority of November trades since that break was the previous high day close, which was April. That came in at 12,123. We saw one test of that, and here we are back at resistance. Watch that trend line. Former resistance, now support, could be in play, but to open up December trade, your key levels, key targets on the dollar index are still 12,204 as resistance, 12,123 as support. Bottom line, exclamation point. That's really the range we just need to clear. Okay, the broader trade's still constructive, but a break below that region would certainly mark correction near term. So it puts things in perspective. You could see some more range-bound price action here. You could see this thing drop towards support, which would give us that near-term lift in sterling that we just talked about, right? Any questions on the pound? Again, I wish I had a little bit more conviction on this one. Mark wanted to look at pound CAD, so let's take a look at that, and then we'll jump back pound yen. Here's pound CAD on the daily chart. Again, a trade that last month's opening range offered no guidance. In fact, essentially the range that we set on the first 6 days of trade, again, was the range that held the trade for the entire month. Momentum is completely range bound. This is, in my humble opinion, Mark, this is as range a market as you can find right now, especially on the daily chart. Momentum. You can't even go for a tag of 60 or 40. See what it looks like near term. All right, let's just do, bear with me, guys. Just going to do some on-the-fly analysis here for Mr. Haberman. See if we can find any nice levels here. And Mark saying, looking to short around 202. Long now, but thinking short soon for a big down move. Well, I definitely agree with you. I'm looking for a turnover here in sterling CAD. We're on the same page there. Your entry at 202 might not be a bad region. You have the upper median line parallel coming in just above that. See if there's any overlap on this extension here. Okay, so it highlights the 100% extension of resistance and where we are right now, 201.56. I'd be looking for resistance a little bit above the 202 handle. Mark, if you look at 202 like 27, 39, this region right here, nice confluence region, my favorite. 618 with 100 or a 1618 off the low is typically a really nice confluence region. That happens to coincide with the upper median line parallel. If this operative, or if this structure is operative, again, we don't have enough tags per se to really rely on this too heavily, but you can see certainly on this last pullback, finding support more or less right around that median line. So that would coincide heading into the fourth. So basically like Friday. Yeah, those are the levels I'd be looking at. And again, where's this retracement? Okay, let's go ahead and adjust that one. And that was a 50% retracement of the advance. Yeah, so looks like a game plan. Near term, I would definitely be still looking for a constructive trade. In fact, if you look at the momentum signature alone, you did see us dip well below that 40 level earlier in the week, but we surged right into 70. We made a higher low on that pullback in momentum. We're right back above 60 again. So you're looking at resistance immediately at 201.56. But I'd still be looking constructive on a pullback with a break here, looking for that 202. 202 is going to be a nice soft target I'd be looking at anyway, just because it's a big figure, psychological barrier. You definitely saw a pivot there last week as support, break, instant resistance. So I would be looking at 202, but I think the more critical area of resistance is going to be just higher at 202.27, 202.39. Mark, does that help, man? He says, nice, should have thought about drawing it like you just did, exclamation point. Thank you, as always. Awesome analysis. I appreciate that, Mark. Craig says, I'm specifically interested in Euro Kiwi thoughts for the next 24 hours. Okay, let me jot that down. Euro Key. And Hussein wants Euro Oz. Okay. All right, we are running late on time, but I'm going to try to get through all of these for you. So, Mark, hope that helps on Sterling CAD. That's off the books. We covered Sterling Dollar. Sterling Yen. Who wanted Sterling Yen? Someone in the room was asking about that. Here's what it looks like on the daily chart. Hey, Eileen, cheers. Always great to see you. I'll see you tomorrow morning. Have a great day. Sterling Yen. Watch for resistance right around here, 185.92, I think, is the level. That's the, actual November open. Momentum heading into 50 resistance, which offered some support on the last time we tested it from the upside. If we break there, you're looking at key resistance higher up at the 2015 open that takes you into 186.95. Let's see what the near-term charts say. Ah, right. Okay, I was looking at this earlier in the week. So, I don't know if I tweeted this on MB4X or on SB, but basically to start off the week, I was looking at a bearish bounce sub 184.87, and as long as that thing held as resistance, I would have looked for a short side scalp. You saw a break above 50 and a break above that basic channel resistance. The actual confirmation for the break didn't come until here, when momentum finally cleared 60 for the first time in the week, and price surpassed the weekly opening range high. You also had a soft target there at 184.87. That was there for a while. Long story short, you're now coming into a huge Fibonacci cluster, and that's basically spans from 185.93 into 186.01. 186.01 being a 100% longer dated extension. This is a basic 38.2 from the decline off the highs. And this is the November open, as we noted earlier, at 185.92. So big region of resistance near term. You did see some divergence all up into those highs. So price action higher high, higher high, higher high, lower high, lower high does suggest that you're at risk for near-term turnaround here. I don't necessarily want to be long yen per se, so I'm not necessarily sure I'm going to be too excited, let's say, about playing the short side here. More so, I'd be looking at buy pullbacks if you clear that 180, 185 basically as resistance, 186 rather, 185.90. Maybe a rally back into this region, another test here, and a short trigger to put you back on the short side. I don't really have a setup right here per se. This is what I would say. Who was asking about sterling yen? I think it was Hussein. In any event, I don't have a setup here because you're not at any extremes. So I wouldn't necessarily want to press this. You're not near a major resistance. More critical resistance would be that upper median line parallel. That coincides with the 618 basically today. This would be a nice play in my humble opinion. Or if you get a final resolution and downside break of that 84.30 level, I'd be looking for that tag into 83.70, which is pretty big. But right now, I think you're just setting the weekly opening range. And if this does end up being the weekly opening range high, you have a really nice setup to play with. As it stands right now, wouldn't really change any of the levels. The only thing I would alter is that 236. All right. Any questions on sterling yen? Okay, Euro key and Euro Oz. Here's what Euro dollar looks like. I think I'd be remiss if we didn't at least talk about that for a minute. Here's what the daily chart looks like. You don't want to be the fool trying to call the low, but it certainly looks viable that you're making some sort of rebound here. Look, this is a trendline support that dates back to the year 2000. We went over this last week, but just a quick reminder on this daily chart. Okay, if you take the 2000 low and the 2001 low You can see that that was almost the exact low that we planted earlier this year, specifically in March. We're right back there again, testing it as support. Okay, keep in mind this dashed line that you see here is also the March, April low day close. That happens to be the same as the reversal day close for March, which came subsequent to the actual yearly low. So big level support, 105.65 or so. Here's that trend line, basic trend line support. And here is a sliding parallel for the current operative structure that we're looking at. We rode that lower median line parallel all throughout the decline. If we do close and pop through this pivot, you can looking for a near-term rally that could possibly extend as high as 107.50. Okay, here's what the intraday charts look like for euro. You just made a break of the weekly open and the initial opening range highs that we made yesterday. And I don't want to get too excited and start tacking on too many retracements yet because, again, we don't have validation that this is the absolute low for the turn. But if it is, basic channel resistance comes in. I'm going to shift this to that Friday high, the Thursday high. Sorry, a little lag in my computer here today, guys. Okay, 106.73 is going to be that swing low that you made from November. And that coincides a little bit higher with that median line. And a break there really is what's going to set this thing off, guys. So the euro is definitely at risk for a near-term reversal higher. It is, coming off support within a downtrend. Important to still note that. The broader trend still remains weighted to the downside. The risk for a near-term reversal higher is there. So when you take a look at the euro dollar and you measure that against, for example, euro key, the reason I don't necessarily favor euro key is because I think you might get some more sideways action here. If the euro decline is sort of stalling and you're going to see some hold or a strength, you'd essentially need Kiwi strength to keep this pushing lower. A quick look, real quick, just to segue into Kiwi. On the 30-minute, that made a break of resistance, last week's highs, the previous week's highs. Basically, you just broke, or you're looking for a test at this point of the November highs. Near-term resistance, 66.69. That's a 100% extension from the low. So if this is corrective, that's going to be your first area of major resistance. Above that, you're looking at the former low day close and a 618 retracement that takes you basically into 67 handle, 67.16. Big region. Kiwi remains constructive above 65.87. So with that in mind, okay, all things held constant, yes, euro Kiwi could see some further short side. But I do think that if euro does show some strength, that euro Kiwi might rebound right off this 1618 and show us some near-term strength. I don't know. Don't necessarily have a setup here. The only thing I do notice is that last week we finally cleared the opening range low. You didn't get much play below that. A break lower from here, I'd be looking for a drop into 55.90, 56.66, key 618 retracement of the entire 2015 range. And this is going to be the high day close for February. Okay, so that is Euro Kiwi. Any questions on that before we move off? Really quick, a look at Euro Oz. I haven't actually checked that out this week, so let's see what that looks like. This thing. Yeah, listen, looking lower. The only thing that would put me back on the constructive side would be a move back, start passing 46.80, 47.80. I know it's a larger ATR. or a larger range, but this is so pivotal. This holds within it basically the yearly open, the 618 retracement of the entire 2015 trade range. This is a longer dated 38.2 of the entire advance from the lows, and we've broken channel support of a descending structure. That's risky. Talk about serious risk. So I am looking lower here below initially 46.80. The break above 47.87 would be needed to put me back on the constructive side. All right, so that's all I'm looking at there with Euro Key and Euro Oz. Hussein wants to take a look at, or Amir, excuse me, wants to take a look at Kiwi dollar and a quick snapshot on gold. So I got to run, but here's gold. I'd be remiss if I didn't show you this. Guys, we just rebounded off of a key 618 extension off of the highs. Here's what it looks like on the weekly chart. I mean, this is pretty big, okay? So this is a 618 extension from the decline off of the highs that you made in 2012 and the high that you made in 2013. You can see I literally just about caught the low that we made yet last week. Here we are again, rebounding right off it. This is the daily chart. Divergence into the lows marks some sort of risk of a snap higher. Key resistance still is not until 1100. So although I'm not necessarily advocating a long here, guys, that's going to be still the bearish invalidation level. So even if it rallies as high as 1100, you're still looking lower in the trade. A break below this, you're looking for the 2010 low. That comes in at 1044. Subsequent targets are going to be at the longer dated 764 retracement off the lows. This is also a near-term 1618. That's basically 9774, 9780. All right. Weekly chart, daily chart. It's a bearish trade any way you look at it. Near term, you're at risk for a rebound higher while above 1053. Remember, even on the weekly basis, you've put in a much steeper low and a higher low in momentum. So the divergence is there. Always keep in mind that we need to see the weekly close before we make any assumptions or assertions about a bias shift here, but the risk is there. If you're looking at it from the daily chart, you're seeing similar things. Lower lows in price, higher lows in momentum. If you see a 40 break to the upside, I would expect to see a little bit more of a substantiated rally. Let's adjust our levels here to the new low. And a basic 236 takes you into 1085. I'll leave that on. So here are the near-term levels I'd be looking at for gold. Amir, hope that helps, man. Thanks, mate. All right, I got to run. Avery says, Mike, 30 minutes showing divergence potential short. Remember, as I said earlier, that divergence signal is definitely there, Avery, but divergence above 70 and sub 30 are going to be your weakest signal. So if you're trying to take the trade based on that, I wouldn't okay it. Remember, we never want to take the trade solely based on a divergence signal because divergence can last for a day, a month, very long time before it actually turns the trade. So it's good that we noted that. A trigger has given out, so I see your point on that as well. Any stops you take would be against that 66.70 barrier, and it would be counter trend, so you're right. The opportunities there, Avery, you'd want to stay light on the pullback, use that pullback to get back on the longs, especially if you get back into 65.87. Avery says, okie dokes, thanks. You're more than welcome. Guys, I think I got everyone's questions here. Thanks again for your attendance. I will see you all tomorrow morning. Again, 8:30 a.m. Eastern. We'll do it all again from the start. Pietro says, Euro Yen, very bullish now. Sad that it touched the stop loss. Yeah, I know that the swing trades got stopped out on Euro Yen. Again, sometimes it's just the way that the chips fall. Same thing with the Aussie Kiwi last night, right? Literally to the pip. A lot of times, even when that happens, guys, I'm satisfied to see that the trade is still continuing to move in our direction, right? Our analysis was sound. Maybe your stop was a little bit too tight. You live and you learn. See you guys tomorrow morning. Best of luck trading. Till then, cheers.